Expanded home path. Okay.
They're still doing 97, Rich. It was my understanding home path's at 95 now.
Yeah, that's like 95.
Hmm?
95.
95, yeah.
I'll check on that. I don't sell a lot of home paths, do you? I haven't seen
I'm
too many home path
trying.
properties. Are there a lot of home paths in San Jose?
No, there's like 2.
LA County,
There's
Yeah.
like 2, and when I looked last, there were probably 10, and all but one of them were in contract.
Okay. Expanded HARP 2.0, we talked about that. So appraiser waivers are being honored. Essentially, this is saying we run the system and we have lenders that have no overlays. Expanded FHA loan. So just today, why don't you grab the DU for that case for Jasmine and just show everyone the high ratio one. So what I've been emphasizing with these clients is that, listen, 43 is going to be the magic number. This is where everybody wants to go. And this is not bad because textbook says 2836. Okay? I give my interns a book to read and it says right there, the ratio for a client is 2836. It avoids any issues. Right now, we are at a high ratio. But I tell them if they don't move fast, okay? Now when you deal with realtors, Jeanette, you want to make sure that they set proper expectations.
They what?
They set proper expectations with their clients.
Okay.
If they don't put a fire under them, then, let me pass that around. If they don't put a fire under them, then the client may think that they can be fussy and picky about the house and so forth. And that's not a good thing, because they will basically talk themselves out of a house, you know, because they're so fussy.
I'll go
So
buy a car because I want to buy something.
So I emphasize that this is coming down the pipeline, okay? I predict this is going to happen by early next year, all right?
loans?
It's not necessarily a QM thing, all right? Here's what's happening. The lenders that lend jumbo money are stuck holding the bag if something happens. So they're more conservative. Right now it's 45-ish,
Yeah.
but let's say there's some defaults. They're going to backtrack to 43.
Yeah.
Then Fed's going to say, wait a minute, why don't we copy the jumbo guidelines too? Okay, that's kind of how I envision the whole process happening, okay? I could be wrong, but ultimately that's my theory and I believe in it. So when I tell my client it, they understand that I believe in it. I believe in it happening. Hey, if I'm wrong, they got a house. They're probably going to go up in value, right? So when it comes to these clients, you have to put a fire in them. Yes?
I have a question regarding Jasmine. What's so unusual about that?
Because initially the assumption is that the ratio has to be 47 or less to qualify. And the reason there's a differential is because of the car.
She has a car payment.
Yeah, she has a car payment. So what's unusual is that it shows an example of a high ratio loan, but without being 47 and with having different front end and back end ratios. Okay. Let me give you an example. If that deal was more like let's say 53, 53, that wouldn't get approved. Okay.
Because the top end is lower.
Yes.
It went through. Okay.
Exactly. So we really have to light a fire under the realtor sometimes when it comes to these changes. Okay. And the client, of course, has to have the proper expectations. So when you counter a client like this, I like to emphasize that, look, you're not going to maybe get the house that you want, but you're going to get a house, and you're going to hopefully ride it up, and then maybe by 2019, we might see a little bit of dip, but I don't think it's going to be as bad as 2008. Okay, we might see a little bit of a dip, but then, you know, it's all cycles. So I say this isn't going to be a dream house, but in case it is, you get a nice 30-year fix, you ride the market
Go
up.
fix it up.
Yeah. So they have to have the proper expectations. And as you know, FHA, one of the biggest things is the ability for gifts. Okay? One of the craziest things that has happened in my career is the Nehemiah program where they had to have no money down to buy a property. That was the biggest loophole. And I'm sure I'm sure there was a reason they took it away because borrowers were defaulting. So there's still a gift as long as there's skin in the game. They can come in with 3.5, that's not their own money, and basically buy the house. And we're starting to see borrowers that are millennials that have no trade lines, or their parents didn't teach them to go out and get credit cards. So that's a great niche for them. Okay. And then one thing that I do, I don't know about you guys, but I promise them I'll look back at this scenario in 6 months, because in 6 months whatever they put down, let's say they put down 10%, they might have now have 20% equity. And they may actually have that mortgage trade line, so now they qualify for conventional. So I promised them to look back, which is kind of cool because if you think of it, it's like me promising, hey, I'm gonna call you and try to sell you a refi. That's all I'm doing, right? But it works. The clients will call me on, hey, Rich, weren't you supposed to call me? You know, it's been 8 months. I want a better loan. Asset-based income. So this is how we should say stated from now on.
Okay.
Asset-based income jumbo loan.
Asset-based, I gotta get that in my head.
Mm-hmm.
Asset-based. Stated, see, sir. Oh, stated. No.
So this is
Asset-based.
Who does that? Asset-based?
A lot of
Bank in
them.
California. This is our
Is this like bank statements?
Yes.
yes, this is bank statements.
What is is it on the 30-year or is it an arm?
Do you remember?
It was 30 years.
Yeah, I
Really?
forgot.
Mhm.
Yeah, it was a 30-year.
Mhm. Yeah, I talked to Beth about this as well.
6 months reserves, and it works for jumbos. So this is a huge niche. If I was out there, you know, this is what I'd be selling. But you have to filter your realtors too. Okay, there's still realtors out there that will work with people that really can't qualify, and there's realtors that have business owner clients. In fact, I can think of a client right now where I just got them an FHA loan because of their cash out consolidation. I can probably put them in this loan. They're a dentist. They have multiple branches. They just don't show a lot of income because they have a really good CPA.
Yeah.
You know, like me.
Like sharp
So,
Yeah.
so this is a perfect niche for them, and we're going to start to see a lot of lenders copy this niche. Okay, so this is probably the golden egg of the bunch because number one, it's a big chunk of money, it's a jumbo loan. Number two is that client is motivated because they've been turned down by the big banks. And then the Do Your Prep Plus, which is the version of the HARP loan. Ultimately, it comes down to building your database, making sure that you are aware of the clients. So if you use our system, we have a scanned version of the file, so you can go back and look at it. If you have your own system, I would recommend that you save the 1003, particularly page 2, because it'll show you the history of the payments, or page 3 and point, I guess, where what their current payment was and what their new payment is going to be. Usually you don't get a copy of the note, right, because escrow usually stores that. But a lot of escrow companies are giving it as CDs now, the lender copy CDs. So this is basically a way for you to reach out to your old database and work it. I mean, just to kind of show you an example here. So this is so we can pass that around. So basically, that's last year. That's before I had a loan assistant, a good loan assistant. We're gonna double that this year. So it's that 160,000 gross commission. I mean that's 6 figures, and that's only doing like three deals a month. It wasn't I was doing a lot, but this year I really my wife is pushing me to make sure I tap into my old database of clients because in her circle she talks to her friends and some of the friends that have bought a house through me that they want to refinance through Wells Fargo or whatever. Okay, and then it kind of like, oh crap, you know what? I missed the opportunity.
Out of sight, out of mind.
It's not that I forgot, it's that we're always under the impression that we're too busy. Okay? Remember the rule, and I teach the real estate team this. Remember that while we're looking at our deal plot, okay? And we're focusing in on the crappiest file. Okay? You pick the crappiest file, and beside that file is a file that's more A paper. Okay? So why work on the file that takes up the space of 3 deals when we can pull another one here? You know what I mean?
And make
So-
room for another one. That's
so the-
what I find myself doing on
But here's what we think. We think that the client that's A paper is only less loyal than the client that's C paper. That's not true. We think that, right? We think that for some reason we have to operate super intense on the A paper client because it's such a viable deal. But no, it's not that way. The only thing you have to do is set up a meeting and set the proper client expectations. Okay? For example, right now I have a client that has been waiting for probably 2 days because they're telling me what they have and they want me to beat the rate. Okay? They feel some sense of loyalty to me to do it.
On
Yes,
which time?
yeah. And then yesterday they're like, okay, can we beat it?
Yeah.
Yeah, I mean, we have 20 lenders, we can beat it.
Mm-hmm.
But yesterday they're like,
Have to save
Rich,
less
if you
money.
can't beat the rate, just tell me,
Yeah.
you know? And, you know, basically, I know we can. I know we can beat it, but they're willing to wait for me. But I set the expectations with the clients. I said, give me some time, because I have 20 lenders. And when I have 20 lenders, it doesn't take me just half a day to shop it. It takes me a little bit of time, because I got all the pricing engines and all that stuff. Okay? And then what I do, I give them an Excel spreadsheet. Okay? Confuse the client so much.
Oh,
I put-
we
I
have too
put-
many offers.
Too many options. Yeah, we did that purposely. We did that purposely
Yeah.
because we want to give the clients as many options to show that we have more than one lender. Okay? Ideally, I like to show 3. And I said, why you give me 3 options? Well, I just wanted to show you my work. You know, like in school, so that you want to show your work. Okay? Then I say, which one do you like? Which option? Which third year? Do you want 30 year, 7 year? I then get it narrowed down. Eventually, they get so confused. They tell me what they have, and all I gotta do is just beat it. That's it.
Yeah.
So while we're working on the C-paper deal, an A-paper deal might be coming down the pipeline, or we go to our database of A-paper clients, you know, and they're all right here, but we're spending so much time in this category here, we forget about that. So it's true. I mean, one thing that that I found is sometimes when I reach in to that pipeline, the A-paper client, they're ready to buy something else, or they're ready to do something bigger than just a loan. All right, but we have to have a good system in place. So if you guys are not sending cards, hey, you know what? I promise I'll check on your situation in 6 months. Okay, that means remind me in 6 months. Send that card out. Make it part of your system. Make it part of your system. Consistency. Does that make sense?
Yeah, a lot of times you have to chase them down, even though they think they, you know, they need to get the loan. It's they forget about it unless you tell them, come on.
Well,
Well,
yeah.
and
I-
two, their mortgage is in their ear every month,
Yeah.
their current mortgages. And so that's why we lose them to Wells Fargo or US Bank or whatever it is, because they're making their payment every month, and every time they get a statement, they're being solicited.
Or also get a lot of flyers. Like I get so many flyers at the house. I'm like, hey, can we 2% rate?
Yeah. Too good to be true.
Yeah. And we
Well,
find from
well, remember the website opt-out pre-screen?
that's all.
Opt-out pre-screen. So if you do that for the client before they close the loan, which will boost their credit score, and they won't get those flyers, although the lender still sends them some flyers sometimes. So they have to check the box that says, do you allow city mortgage to share your information with third parties?
I didn't know that. What is it? Opt-out pre-screen?
Uh-huh. It says it doesn't give them some points, but realistically I've tested it. It does give you 3 to 5 points.
Can we do that for
Without the
everybody we
points.
have right now?
You have to ask for permission.
Shopping
But
around? Because, you know, with some of the trigger leads, is somebody, if we pull the credit, they, you know, they have access to it, they sell it to somebody else.
I can't
and
do the
then
trigger leads. What?
No, but I'm saying like, they, let's say on Jasmine, right, she said someone who called her with an offer, she got a letter with an offer, comes in out of bank, said that they will do a loan.
Why is she loyal to me?
Huh?
Why is she loyal to me?
Because you've been working on it for a while, and
No, it's
she
because we do the
doesn't-
face-to-face meeting.
She knows you, right, but I'm saying, I said, how did they, I said, did you go apply for anybody, anywhere else? She didn't apply anywhere else. But the trigger leads, right, we used to buy them, but those are the ones that if you pull their, anybody pull their credit, it shows up, and then now I'm gonna solicit
Yeah.
them. But if
Well,
we sign them up.
according to the guy I know that works in the credit vendor, it's all done by the bureaus. So they can go directly to Equifax and buy those leads.
True,
Um,
but if we do this.
but the reality is this, if the client is not loyal to me, I don't want to work with them. Why am I burning my time with them? So when I do the initial consultation at the meeting, I will figure out if they're going to be loyal or not. And if they're not loyal or they're still shopping, then, you know, so be it. If they're still shopping, I'll tell them to go shop it, and when you find out, you know, what you can do, just come back. This way I'm not spending time, I'm deferring that process while I'm working on a different deal. So I'm not too worried about that. As long as I have done the initial consultation with the client, you can basically build a relationship. For me, when I sell, it's education. It's basically setting expectations, educating them about the market, and also helping them understand what the challenges are with their loan. Okay, once they understand that, they say, wait a minute, my loan is not that easy. Rich is using some pretty cool niches here. For example, DU is not asking for tax returns.
Yeah.
Okay, and she has a business she does it on the side, and it's kind of like sometimes it makes money, sometimes it doesn't make money. But DU's not asking for the tax returns. I'm not going to give them tax returns.
Yeah, no, thank you.
What about the 4506? Well, if you provide the tax returns, the 4506 will be verified. If you don't provide the tax returns, the 4506 will be signed, but you don't have to pull it. That's what the DU says.
Oh.
So you know, that's basically, you know, how I do it. There's a lot of deals here. We just have to stop focusing on what's in front of us and focus on what might be behind us. As long as, you know, it's there, we have clients ready to go. So I would definitely want you to reach out to your old FHA Streamline clients. Because you're gonna save them money, they're gonna love you, you know? And, you know, if you look at the reviews that I have on Yelp, and if you look under that, it's all clients that are super happy. So you capture them in their moment, take a video, get a review, get a referral, and tell them to spread the word. You know, gift cards go a long way. I met with this realtor yesterday, and she's like, you know what? First she said, Rich, how come it takes you so long to close the loan? Okay, it's a hard loan. We had this guy put some money in, and then he got the cash out. So it took us 3 months, but we figured out a way. What happened was he messed with title. He messed with title, changed it a little bit. That kind of affected it's called delayed financing. So there's another flyer on delayed financing that's not in this packet that you guys can print out on our website, and you can put your name on it. And one thing she said was, well, you know, that's okay. The one thing I know about you is that no matter how hard it is, you get the loan done. It might take a while, but you get the loan done. So I said, no, that's pretty much true. I don't like to give up. I like
So
to
what
let
did your
them-
client do that took so long?
That's the realtor. The client does real estate, self-employed real estate broker in New York. Put the money in, all cash, change title on me, and then want the cash back. Want to get a loan, pay out that cash. So basically, well, because he messed the title, it took a longer bit of time, but in the end we got it done. Is he rate sensitive? No. He doesn't care.
He just wanted the money.
He just wants the money. He's got like a 5.125 or something like that rate. So I want you guys to think about that in your business, okay? Because a lot of times when we get scenarios and I'm helping, Marilyn tells me about it, I'm trying to help solve the problem behind the scenes that you guys don't even know. But I'm like, why are we working on this deal? You know, because there's so many different complications of the deal. You know, put it this way, the client doesn't have their own money, but they have a low credit, and they're not willing to pay. If they're not listening to you for your advice to help them get qualified, then what's the point? Let them go shop around, let them fail. First, they come back motivated, ready to listen. You know, that's how you're able to leverage that. And then build some campaigns. Build some campaigns around your database, okay? Let me give you another tip here. Vertical response, I learned this from Lon actually. There is no monthly fee unless you send an email out. Vertical response, that's one of the email senders like Constant Contact. Because for me, in my marketing, I have to send emails out regularly. I pay a monthly fee, it's worth it, it's $80 to $130. But this one, you pay per usage. So what it'll do before I send an email, I'll say, okay, you know, here, you want to buy this many contacts, you buy it, it sends it. And as your database grows, you simply have a system to add it to, and you're constantly, you know, improving that. Hey, guess what's coming down the road? You know, there's going to be some portfolio jumbo loan product. If you're thinking of buying, you know, now's a good time. The products are tremendous. If you're still upside down, we have programs that can help you. You know, things that will match your database, okay? Like Chris, for you, I would mention the benefits payment-wise of not having mortgage insurance, and maybe some article about is mortgage insurance tax deductible. Something that's kind of indirect, but emphasizes, hey, wait a minute, I don't really want to pay the mortgage insurance. So
for subject line, what's the best books that doesn't go into their junk?
that's a challenging one, but I like anything with the word your, okay?
Yeah.
So updates from your loan officer, updates from Rich. I want to basically some information about Keith's loan, okay? I don't want to say your refinance, okay? That's the one that gets in the spam folder the most. When you use a system like this that is monitored, they kind of guarantee that you're not going to be in the spam folder. If your email looks like spam, they'll tell you about it before they send it. You can do a spam check on it. So, but I find that personalization really helps. Okay. Right now while recruiting, I got a lunch appointment because I said, lunch. What did I say? I said, Megan, would you like to have lunch with Rich? Something like that. That's what it says, and we got a bite. All right. The subject is customized. The first part is customized with the first name. You know. So as you build this, it grows, and you're not paying any monthly fee. You pay only when you want it. So and the problem that Brian Buffini says is that we get so caught up in, okay, I'm closing 5 deals this month, I can relax. You constantly want to be building it. You constantly want to be, building your file. Yeah. So that while you're getting the files out of here, there's more that's coming in here, and really, your job as a flyer is to filter it right here before it even goes in here. So, that's just doing part-time. If you think about it, that's just my income doing it part-time because I'm focused on real estate, right? So we can make a lot more money. We just have to build the right infrastructure. And the good thing about Maryland that I really like is that she is aggressive. So I don't have to go out and chase conditions, and you guys should not have to go chase it. So I didn't want to add new lenders until everything was solid, and I feel 100% that we're solid, and we can basically build around that aggressiveness, get deals done, and you guys can basically focus on origination.